What's up, Banter fam? I'm your host, Miles. Welcome back to the show. Overnight, we did get big news. In line with market expectations, the Fed did hike rates by 75 basis points. This was pretty much in line with what the market was expecting. Obviously, if we did get the 50 BPS hike, then the market would have significantly rallied. If we did shoot over at 100, which was unlikely, then obviously the market would have come down. So the 75 basis point hike was in line with expectations. Overall, after watching the FOMC meeting, I come out feeling like the tone was fairly hawkish, but the market responded quite well to the meeting, probably because a lot of this news was already priced into the market. So the Fed did say they are highly attentive to inflation risk. The priority right now is bringing down inflation. They have a clear path to do that now. The hike should taper off throughout the year. There's a large chance that the next hikes are lower at the 25 basis point region. But I think the market just liked having a bit of clarity overnight. So I want to look through some of the charts right now that are showing this response on the market. And we did get the Bitcoin price rallying from around 20,000 up to 22,500. And Ethereum did the same from 1,000 up to 1,200. So the market did respond positively to this after, we did get some positive news, or not really positive news, but at least the uncertainty was eradicated, because we know markets hate uncertainty. So whenever certainty does come to the forefront, we often do see a price rally like this. I'm not sure this is here to stay, though. I do think this is potentially a bit of a bull trap. I think potentially we do come back down and test these levels. I don't think we've seen the full downside. So I want to look at the big picture and chart Bitcoin here to give you an idea of the key levels that I'm looking at. So clearly, this 20K region is a key level. This 17 to 19K region is that next level. So if we did break 20K, then we are looking at a 17 to 19K Bitcoin. That is the previous support here. And then if we come down and we test these previous highs in 2019, which was the lower high, then that level is 12 to 13K or 14K, if you take this resistance here. So those are the key levels, basically 17 to 19 and then 14K. If we did break 14, then you've got further downside at 10K, of course, but I don't see that happening. But in the short term, the market did respond quite nicely, and we did see equities tick up. We had the Nasdaq up 2.5%, the S&P up a couple percent as well, and from the lows here on Bitcoin, the price is up 11% overnight. But the altcoins are really what are kind of leading the pack here. And interestingly, if we do look at Bitcoin dominance, this dominance has taken a tank. So even when the market was dropping and dropping and dropping, Bitcoin dominance was actually dropping with it. So we did see the altcoins kind of get front run in terms of being sold off. And then Bitcoin and Ethereum, those were the ones that got hit most heavily over the last couple of weeks. Because that was where most of the liquidation fears lie. Because a lot of these major hedge funds, obviously like 3AC and then what happened to Celsius, they hold a lot of Bitcoin and Ethereum, and they're their primary assets. So a lot of the liquidation fears of a cascading liquidations centered around Bitcoin, centered around Ethereum. Hence why the prices of those assets have decreased more drastically. So as an altcoin proponent, I guess it is good to see the dominance isn't completely rocketing, because if we did break that key 48% level, then obviously, we're looking at a 57% dominance. But right now, we did get rejected on this key trend line. The next level I'm looking at is 42.7%, and then the next level under that is 39.18%. So those are kind of the levels we're looking at dominance. If we did get a push down in the dominance, that may indicate some strengthening from the altcoins. However, I would like to see Bitcoin dominance actually increase and see some liquidity come back into Bitcoin, because we all know that is where the liquidity likes to go first in the market. But the news overnight, with a bit of the uncertainty now out of the way, saw some pretty huge gains across some of these alts. Whether this is just a dead cat bounce or whether this is, the start of a reclamation of new highs is yet to be seen yet. But we did see Sol respond very well. We saw DOT respond very well from these lows here, up roughly 31% from lows. And we saw just overall throughout the market a pretty green night. So is this the time to be buying now? Do we want to be jumping back in? Or do we want to be looking at getting some exits in order to buy back in later? And what am I doing? How am I accumulating? Well, that's exactly what I want to talk you guys through in today's show. I want to talk you guys through my DCA plan, my accumulation plan, how to actually identify bottoms, because in this market, so many people are just aimlessly waiting for the bottom. But what does that actually look like? And what will be the indicators that suggest we are nearing a bottom, and when should we start accumulating? Because obviously now over the next 12 to 24 months, we have a massive chance to, make historical gains in this market. We know that bear markets create millionaires, but bear markets can also create flops as well. If you don't play it right, you can still wreck yourself in the meantime. So not every single millionaire is created in a bear market. You have to play it smart. And that's, why I'm going to try and help you guys today with giving you my strategy for accumulation during this market. Apologies for being late, by the way, on the stream. I'm quite sick at the moment, but I just wanted to stream because, we had some big news overnight, and I thought I wanted to, kind of address the market, while it was still fresh in my mind. So yeah, apologies for being a bit late today. I did struggle to get out of bed this morning, but we're powering on. All right, so people are basically trying to time the exact bottom. I'm seeing all over my feed right now, everyone's saying, 15K Bitcoin's the bottom, 500 Ethereum's the bottom, and they're kind of just aimlessly waiting and waiting and waiting. And, we are in crypto told not to catch a falling knife. We're told that catching a falling knife is dangerous, but I think that this logic is slightly misguided because in certain scenarios, waiting for the bottom probably isn't the best move. And look, with certain altcoins, it might be, but when we're talking about accumulating quality assets over time with a long-term time horizon, then you're going to be much better with other approaches. So this is mainly the issue with trying to catch the bottom. Bottoms are extremely hard to pick in crypto. So if it were that easy, then basically every single investor from 2018 to 2020 would be rolling in cash right now because they would have gotten the exact bottom. But what actually ends up happening is most either lose interest when things turn bearish, or they wait far too long to enter and they don't actually catch the exact bottom. So in my opinion, picking the bottom is just as difficult as picking the top. So people, when Bitcoin is 15K, if it hits 15K, they'll be screaming for a 5K Bitcoin, screaming for a 10K Bitcoin. Just like people were screaming for a $200,000 Bitcoin when Bitcoin was at all-time highs at 69,000. So it's very, very hard to pick the bottom, and it's just as difficult as picking the top. During March 2020, and this is probably an example that I think is quite relevant because that's the last bottom we got in the market. Bitcoin fell from 8K to 3.7K in 2 days. So people were very, very scared at that time. In 2020, people didn't really want to buy in, myself included. The market was panicking. There was a lot of panic over crypto going to zero, over stocks, potentially, having huge drawdowns, which they did. And a lot of people didn't deploy. And that's understandable because when you have a big macro black swan event, you don't necessarily want to be deploying aimlessly, catching a falling knife, as I said before. You do want a bit of market clarity before deploying. But I'm making the argument today that sitting on the sidelines can be equally as detrimental as trying to wait for that bottom to deploy. Because what ended up happening in 2020 was Bitcoin rose from 3.7K to 7K. People said, it's just a dead cat bounce. Then it rose to 10K. People said, surely it'll come back down again. Then it rose to 15K. And people said, shit, I better get back in. I'm not in the market. And the exact same thing could happen today. Like, for example, if Bitcoin, let's say 20K was the bottom. Now, I don't believe it's the bottom. I think we could go lower, but let's just say 20K is the bottom. What will happen is we'll get a rally like we did today to 22.5. People say, it's just a dead cat bounce. It's just a fake out. All right. Then it goes to 25K. People say, no, I'm not buying now. I'm not buying the pump. I'll only buy the red. I'm not buying now. It's going to go lower. It's going to go lower. All right. Then Bitcoin goes to 30K. Then those same people start saying, maybe back on, but, we're still approaching resistance. It may not recover. Then it goes to 35K. And then those same people go, oh, wow, I got to get back in now. And then they FOMO in at those levels, and then the market either corrects or they get a suboptimal entry. Now, obviously, that's a hypothetical scenario and one that's not going to play out over the next few weeks. But that is exactly what happened in 2020. And a lot of people kind of FOMO'd back in at 15K when they could have started averaging in at 3.7K, but they were too scared. So in that case, you would have missed a 300% move because you were too caught up in waiting for the bottom. And this is why I'm not really trying to time the bottom. I'm a believer that many people just won't get their entries because they're too busy waiting, and they'll subsequently end up FOMOing in at higher prices. So if your goal is to accumulate quality assets like Bitcoin and Ethereum, and I'll talk about altcoins in a few minutes, but if that is truly your goal, then adopting a dollar cost average approach really does take the guesswork out of timing the bottom here. If your goal is to accumulate these assets long term, if you think that Bitcoin, Ethereum will be priced significantly higher than today, then we are getting generational buying opportunities. And regardless of whether Bitcoin goes to 15K, goes to 10K. If your goal is to accumulate long term and you have conviction in these assets like I do, then as many as you can get your hands on during a downtrend is the optimal way to go about it, because I'd much rather buy down on the way down than on the way up. I'd much rather dollar cost average on the way down than waiting for that pump, waiting for that relief pump. Now, you can make the other argument, and this is a very valid argument, that we have time here and there's no rush to make decisions. And I 100% agree. I think we do have many, many months for this to play out, and I'm not in any sort of rush to accumulate. That's why I've set out a plan. So I've set out roughly a 6 to 12 month accumulation plan. Now, I'm DCAing into select assets of my choice, primarily Bitcoin and Ethereum, which constitutes around 70%. 30% into some altcoins that I really like. And this is a plan that I'm going to stick to no matter what. I actually came up with my plan at 30K and I said, if Bitcoin gets to low 20s and below, then I would ramp up my DCAs heavily. And this is regardless of whether I think we're going lower, because, I set out a plan at 30K. So I am buying now, or I was buying yesterday when we hit 20K, because that was my plan. And, if you don't stick to your plan, then you've really got nothing in crypto. So you need a plan and you need to stick to it if you want to succeed. And I said I was going to buy at 20K, so I bought at 20K. But you have to set a schedule that works for you. So there's really a couple approaches you can take when DCAing. You can take the approach of, regular intervals with regular set dollar amounts. So maybe you do, $200 a week. Maybe you do $1,000 a month. However much capital you have and you want to deploy, you can kind of set it out into specific assets. I personally go with a more flexible approach. So I have a minimum weekly amount that I invest, but I have flexibility to deploy more on extremely red days. So when the market tanks like it did over the last few days, that was on this bounce here, that was a sign for me to deploy around the 20K mark. Just because it was extremely red, there was a lot of panic, there was liquidation fears, and I made an exception. So I increased my dollar cost averaging amount for that particular week because I knew that things were looking particularly bad. And I like to counter trade sentiment. Although things can get a lot worse, obviously we are in a bear market. I'll always stick to counter trading sentiment and averaging into a position over time. So here are the caveats here, because I know a lot of you are probably saying, yeah, but I'd rather wait. I'd rather wait for the exact bottom. And these are the caveats, and these are the situations where you're right. So if you're a trader, you need to get timely entries. As a trader, a few percentage can really be the difference between getting liquidated and making huge gains. So if you are a trader, obviously, you would not be trying to DCA into this market. You would be looking for that exact entry, or you'd be looking to ladder in, around a very specific range that you like, because, a few percent when you're trading with leverage can really be the difference between success and a failed trade. And for riskier altcoins, I'd make the same argument. There are a lot of altcoins right now which still have 90 to 99% downside. Maybe some of these safer ones only, have 50 to 60% downside. But, a lot of them still have significant downside. So I do see the merit in holding off on a lot of the smaller caps for the time being, waiting for a bit more clarity, and then DCAing, in when the time is right. But for Bitcoin and Ethereum, and for select layer one assets, just to give you, a couple, like an Ethereum, a Near protocol, potentially a Solana if you're bullish on it, those assets, I would say are okay to DCA into. So you can definitely start making a dent on those positions over time, like you would with Bitcoin and Ethereum, but you just have to be measured with the amounts that you DCA. So for the riskier altcoins, I'm still holding off largely, but I am DCAing into a select few, because if you have conviction in a small cap, if you think, a $5 million market cap protocol is going to change the world, and that project has runway, it has good tokenomics, and it's going to survive, then I don't see anything wrong with starting to have a little nibble at these levels. I don't see anything wrong with starting to come up with a DCA plan for those assets as well, because those assets, will rally very heavily when we hit the bottom. And although they have significant downside if Bitcoin keeps tumbling down to 15K, those assets may be worth accumulating. So you don't want to be too linear in your approach to DCAing. You want to be, you want to have, a well-rounded strategy that incorporates maybe some altcoins, but is largely protecting your portfolio. Because the thing is, you need capital. You can't be deploying all your capital, or DCAing doesn't work. It only works if you have enough stables on the side to continue to average in. So if you're in a position where you've only got 10% cash, then I wouldn't be DCAing because you don't have the capital to be able to sustain DCAs over time. If you have income coming in from outside of crypto or, from yield farming, etc., and you do have that income coming in, then you can probably afford to DCA. And you can probably have a little extra runway when it comes to averaging into this market. But what are the bottom signs? Because, okay, you can start DCAing now. You can come up with a plan to buy at 20, 18, 15K. But obviously when the bottom looks very close, you want to be ramping up your percentage, or dollar amount allocated to specific assets. And during that time as well, that's when you may be looking up at going a little more risk on with some of the smaller caps. Because once downside's largely in, then, the returns on these small caps will be massive. But as I said before, you can't exactly pick the bottom. So what are the signs? What are the rough indicators that we can use in order to determine when a bottom may be, so we know when to ramp up? Even if we don't get the exact bottom, we're at least buying in the range. So a few indicators you can use as guidance. Look at liquidity walls, look at the buys and the sell walls, look at the historical support ranges. Historical support on Bitcoin, very likely that one of these ranges ends up being the bottom. So the bottom being, 17 to 19 or 12 to 14 or 9 to 10. If the whole world collapsed, then 3K is another support. I highly, 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 highly doubt we ever get there. But, those are the key levels for you to actually monitor. Bouncing on historical support could be, very likely from a psychological standpoint. And the Emperor actually gave some interesting insights as to whether, when he thinks bottoms occur. And this was when there's no one left to capitulate. So everyone's basically already tossed in their bags. When there's no longer a larger advertisement to be liquidated. A lot of these bigger hedge funds, a lot of these bigger VCs are now, liquidated, the ones that were over leveraged. As long as they're liquidated, then that it could potentially be a bottom signal. And then a firestorm of negative news and the price still doesn't dump is another indicator. So if the Fed comes out and they raised by 100 basis points and Bitcoin was 10K and it stayed at 10K, then that would probably be an indicator we're close to the bottom, because news starts to not affect the market at these levels. For example, when Bitcoin when we've gotten bullish news for Bitcoin over the last couple of months, it hasn't really affected the price in a bullish manner. It may have gotten little pops, like when we saw, positive announcements from Matic, positive announcements from Oasis. They kind of fell flat because the entire market sentiment was trending downwards. And the same can work on the way up. If the general market sentiment, is so bearish and more bearish news comes out, and things don't necessarily move in terms of price, then that is a good indicator we're at the bottom. So that is my thread, and you can check it out. Link in the description to my Twitter if you want to look through this not catching the bottom kind of thread here. And that's kind of my outlook on DCAing. But I have a few projects that I am DCAing into, and I kind of want to give you a little more specifics on what I'm buying. And give you some more specifics onto, how I'm conducting myself. Because look, at the end of the day, the way you DCA, the way I DCA will be two different things. Your risk tolerance and my risk tolerance may be different. I want to preserve a little bit of capital, so I buy Bitcoin, Ethereum. If you only have a few $1,000s to invest and your ultimate goal is to make $1 million, then obviously, going for a slightly more risk-on approach is gonna lend itself more towards your goals. So the percentages I use don't necessarily reflect one for one with what you should use. Like, nothing we do here is financial advice, but I can tell you what I'm doing, and maybe that gives you a little bit, steers you down the right path of maybe how to DCA, or what assets maybe you should be looking into, even if it's just to dig a little bit further. Because whenever I suggest an altcoin, I always suggest that you do your own research. Like, I can be very, very bullish on something, but that's great. It gives you a starting point, but it's also good to start, thinking for yourself. And if I say I like Near Protocol, actually, doing the hard work and using, some research methods to actually substantiate your own thesis. And I always recommend doing that whenever we discuss these altcoins. So Becker kind of backs up what I was saying here, and his sentiment right now, although he stirs a lot of people up in the bull, his sentiment right now is actually pretty similar to mine. He said Bitcoin bulls were right 80% of the way up, and that final 20% they overshot. Same thing will happen with turbo bears. The thing that saved me in the bull run was selling all the way up and trying not to nail the top. I'm doing the same in the bear. Imagine being a bull who bought at 3 to 5K and didn't sell around 70K or lower because you're hanging out for 100K. millions of mostly correct bull with generational buys did this. So, a lot of people that bought at 3 to 5K were holding out for 100K and they never really got their exits. Now, the inverse thing will actually happen. So there'll be people that will miss generational buys despite nailing the top. So they may have sold at 70K, but they're not going to be able to buy in back at the bottom because they try and time it and they miss out. So, Becker kind of shares my sentiment in terms of the thread I wrote. And then he said, and this is kind of the segue into my next point about DCAing into altcoins. He said during the mid to late bull, the only way to make funny money was finding moonshot lucky gems. It was hard. You had to find industries, narratives when they were popping, when no one knew about them. You had to kind of ride that next wave. But during this bear, you can literally invest, be lazy, invest in the top 50 and make it big. During the bear, WAGMI can actually be true. And I kind of agree with him to an extent here that, you don't need to be as much of a genius in the bear market to come out ahead. Obviously, if you pick that next big narrative, that's when you're going to get those 100 to 1,000 plus X gains. If you can pick that narrative that hasn't popped, that'll be large in the next cycle, those are going to make life-changing gains. But at the same time, to make very solid gains, you can basically invest in any quality project that will survive. The hard part being if it will survive. And you can invest into a lot of these projects, L1s included, narratives that we know are going to be strong, that were strong last bull run, that, potentially didn't reach their full potential, gaming being one of them, for example. And you can be a little bit lazy there and you can probably still profit. So if you really want to make that crazy money, yes, you got to find those next narratives. That's what I'm doing over the next few months. I'm going to be identifying those narratives on the show. I've got some awesome stuff planned in terms of doing some live research and digging into projects because my goal right now is to find the next big narratives. But at the same time, if you do want to allocate a bit of your portfolio to being quote unquote lazy, you can probably still end up very far ahead in this market because it's a bear run. And that is giving us, as I said, at the bottom of this thread, is giving us this generational buying opportunity. Like the next 12 to 24 months are a rare second chance if you did miss that 18 to 20 bear market. And it's really up to you now. It's your choice whether you let, another one slip, another bear market slip by, or whether you grab the opportunity with both hands. And I'm choosing the latter. I'm doubling down over the next year. I've got my DCA schedule set. I'm starting to build up my portfolio watch list that I'll be accumulating. And I'll run you through some of the stuff I'm doing right now because I'm starting a little bit safer. So, okay, there's many small cap altcoins I'm interested in. That isn't really what I'm going to be talking about in today's video, although I will give you a couple because, it's just out of interest. But largely right now, I'm kind of starting off with my Ethereum bag. So Ethereum, an asset that got, heavily hit. Obviously, we know the merge is coming out later in the year, which will have the 98% reduction in energy consumption as they switch from proof of work to proof of stake. Transaction speeds become faster, gas is way lower, and you can actually earn 10 to 12% on your ETH asset. And this will also enable staked ETH stakers to redeem that asset for 1 ETH, which is, bullish for staked ETH, which has previously taken a bit of a hit. So the merge, I think, is very bullish. And, I did a video a couple of weeks ago saying how bullish I was on the merge, and I still am. A $1,000 Bitcoin, Ethereum, a $1,200 Ethereum, a $500 Ethereum doesn't change what's happening. It doesn't change the facts of the merge. And the facts are the issuance drops from 3%, which is the current supply growth. So every single year, Ethereum emits 3% of their tokens. Post-merge, that'll be minus 1.2% according to the financial models here. The ETH burn will, the issuance will go from 5.4 million new Ethereum per year, all the way down to 0.5 Ethereum per year. So this is amazing for the tokenomics, which is why I am bullish on the merge. And it's also great for energy consumptions. It means institutions, especially with environmental concerns, many stakeholders now to abide by having a reduction in energy consumption does make it slightly more palatable from an institutional perspective. But the main thing is that lower gas fees and the fast transaction speeds, because we know Ethereum, at one point became almost unusable with its gas fees. So I am bullish on the merge, and it's something I want to position myself for. The effects of it, probably won't show until next bull run, and maybe a year or two until we start seeing the effects of the merge. So there is no rush, and this video should not induce panic because we have time. You can average in slowly over the next 6 months and still get a great buy zone. In fact, it's very likely over the next couple months, we see lower levels than this, potentially much lower levels than this. But that's okay, because with an asset like Ethereum, my goal is just to accumulate it, because I know what's coming for Ethereum, and frankly, I want to accumulate it. So it's a slightly safer asset, but it's one that still has that 10x upside. So something like a Bitcoin, it's going to struggle to 10x in the next cycle. Okay, it very well may, and it may get there, and $1 million Bitcoin isn't off the cards over the next few decades, but with its market cap, and with its current narrative being this kind of like inflation hedge, gold substitute, I don't think it has that as high of a ceiling as an Ethereum does. Although Ethereum carries much higher risks, especially if like somehow the merge failed, or if somehow something went wrong with the protocol. We know it's proof of stake now, not proof of work, which is historically the more secure mechanism, although it's not as scalable, so it doesn't really work for something like Ethereum. I think Ethereum still has more upside. So that is kind of like the asset that I'm gearing myself towards. Now, I am accumulating Bitcoin as well. That's my store of value bag. So when I put money into Bitcoin, I basically never want to sell it. And I'm not really trying to make money on those buys. So I think a lot of people kind of get this wrong. If you're trying to make crazy money in crypto, I know a lot of you don't have hundreds of thousands or millions of dollars to invest, and that's okay. But if that is you, and let's say you've got $5,000 to $10,000 to invest, then following an asset split where half of your wealth is in Bitcoin, that's not lending itself to actually making crazy gains over the coming couple of years. So the problem with that strategy of putting 50% in Bitcoin, like a lot of influencers tell you to do, and in the past, I've been a major proponent of having a large percentage in Bitcoin, and I still am, but only for investors that are trying to preserve capital, because the upside on something like a Bitcoin is just, not going to give you the returns, unfortunately, a lot of you are looking for, and that's fine, but you have to set out your goals, right? If your goal is to make, is to turn $10,000 into 100,000, there may be something gearing towards those L1s, and Ethereum might be a better play. If your goal is to turn 10 into 50 or 100%, then, a large percentage in Bitcoin will probably get you there. If you're really ambitious and you're trying to turn 10 into like $1 million, well, you're going to need to take more risks. And yes, getting to 100 is the hardest part. Once you get to 100K, it becomes a lot easier from 100 to $1 million. So 10 to 100 is by far, that hardest stretch, and you can play Bitcoin, Ethereum, and some of the L1s, to get there, try and get that 10x, and then from there, then you can, gear up for potentially 10xing that 100K. But the thing is, you just have to be mindful of your goals. So, Bitcoin, Ethereum, I'm accumulating them, but I'm also cognizant of not going too crazy on a Bitcoin. I'm just keeping it real with you guys. Like, if we invest 50% of our capital into Bitcoin, we're not going to make life-changing gains. And I'm a little bit of a degen. I'm trying to be responsible and pragmatic throughout the next 12 months. But at the end of the day, I'm after what a lot of you guys are after, crazy life-changing wealth, like the Moon Kyle. So going for a Bitcoin isn't really going to get me there. So that's why, like, even though I'm DCAing to Bitcoin, percentage-wise, it's not as crazy as my portfolio. It's more, the money I invest into Bitcoin is more income that's coming in from other businesses and my job, etc. And that income that I want to save is kind of like being treated as a savings account with Bitcoin. Kind of like treating it as an index fund. That's how I treat my Bitcoin. All right, I've harped on about Bitcoin, Ethereum enough. Ethereum is probably that next stop, probably where I'm gearing more capital towards. I'm also tossing up maybe starting a validator node, doing some stuff around Ethereum. So trying to accumulate as much as possible on the Ethereum side, because, that's where I see, a lot of growth coming from. Going down this list a little bit, Polkadot is one I'm looking at heavily. It's one I didn't really have much exposure to in the previous cycle, but I see interoperability as being a big narrative. Off the back of DOT, we do have Moonriver. We do have Moonbeam, which I think, are going to be good plays at some point. But DOT is one that's gotten smashed, and it's one I do want to accumulate. I actually believe in DOT more than Atom, because DOT actually has good token value accrual. Sorry to all the Atom maxis out there, but the value accrual on Atom kind of sucks, in the sense that it's a great protocol. Atom's tech, Cosmos, it's amazing, amazing, amazing tech. The problem is it doesn't really accrue value from its network participants increasing as well as a dot, where obviously parachains on dot, they need to lock up their dot tokens. That reduces the supply. Dot's also burnt. And obviously, fees are distributed to stakers. Whereas, an Atom, it doesn't really have as solid of a value accrual mechanism. Probably one of the major reasons why Atom didn't really get that pump, that a lot of people were looking for, despite the tech being amazing, amazing. One of the reasons why I'm gearing my L0 buys, so my layer 0 section of my portfolio, more towards a Polkadot. Now, yes, this is something I'm comfortable DCAing into now, but with a smaller percentage. Roughly 30% of my buys are going into alts. So obviously, if we take dot as a segment of that, it probably only constitutes, let's say, 5% of my total DCAs. So that's something I'm buying. And then out of that Polkadot holding, I am having a little bit of a nibble at your Moonrivers and your Moonbeams. Now, yes, I am buying a tiny, tiny, tiny bit, but in terms of, my desired position, I am going to hold off a little bit on those for the indicators that I was showing you before. When we get that true capitulation, obviously that means these alts will get smashed. Comfortable buying Ethereum, comfortable buying Bitcoin, comfortable even buying these L1s, because the downside probably isn't 90% on these L1s anymore. It's probably closer to 50, 60, 70%, which would still be bad, but it's a much more palatable place to DCA. Whereas these smaller ecosystem projects off the back of DOT, I'm nibbling now because, as I said, you can't pick the bottom. But once we get a little more clarity, that's probably when, I'll ramp up my DCAs. So, DCAing isn't linear. You can DCA over 6 months, but then there'll be periods where you DCA heavier. Now, the heavier periods in terms of these small caps, will be when true capitulation occurs, when the market gets even worse and just looks like it's dead and everyone is freaking out and we only have 500 live viewers on the stream instead of 1,300. That is when I'll be aping into these small caps. But for now, nibbling away at some of these ecosystem projects because I like them. Obviously, Solana, one that got hit massively. One I'm placing bets on because I believe in it. I do think it has flaws, but I'm still placing bets because I do like it, as a tech stack. If they fix some of the issues, obviously it's got issues. AVAX, another one of them that I do like and I do want to accumulate because we don't really know what the winning L1s will be. At the end of the day, there might be 3 or 4 L1s that win. There's probably 20 on the market right now. So yes, you can go with high conviction and bet on one narrative you really, really, really like. But the thing is, going into this next bull run, there are going to be L1s that rise to prominence that we don't expect. And there'll be L1s that are massive last bull run that die. So by investing in a few of them, I like to have around 5 or 6 and some ecosystem projects in them. It's kind of diversifying risk a little bit and making sure that I do catch that next upwards move. Link, I'm seeing lots of comments about Link. I love the changes they did to the economics. I think the roadmap was great. I'd love a little more clarity over, how the staking rewards will progress. I think they're starting at 5%. But, previously a coin that didn't really have much of a need from retail. It was mostly needed by projects to pay in Link to get Oracle data. Now we have some of the retail backing coming in for Link, which I think will be great long term. Remember this, there's no panic with these alts, guys. You've got a long, long time to accumulate. Near Protocol, this is one that I am accumulating heavily. It's actually one of my biggest L1 bets for next cycle. Unless something changes, of course, I'll let you know. Currently, my thesis is that NEAR will probably outperform a lot of these other L1s. I just like the fundamentals here. The thing is, a lot of projects, they don't have runway, so they won't really succeed. Throughout this bear market. We know that NEAR does. I mean, just look at the backers here. This list is nuts. Even if 3 or 4 of these went down, they still have many, many backers. Like they've got A16, they've got Pantera, Coinbase, Arrington. Like you won't see a more stacked project in terms of VC backers. We know how important VC backing is in terms of funding development. And we know how important great development is in terms of acquiring users. Obviously, that ends up reflecting in the price. As the price of a network increases, as the amount of users increase, that's just the law of the network effect, right? So having this massive VC backing, one of the reasons I like NEAR, I like the devs, I like the tech. They actually have sharding already, something that Ethereum wants to implement in 2023. NEAR already has that dynamic sharding. And I barely own any of this for full transparency. I own some NEAR, but barely any. So, I'm not shilling this. I'm not pumping my bags. I'm getting you guys in basically before I'm even in. And that's the beauty here. We can actually accumulate together over the next few months. And this is one that I'm looking at accumulating. And then off the back of that, a very, very small percentage I'll probably allocate to the ecosystem. You got a few picks. Ref Finance, I think, is great. Aurora is great. Bastion's great. Ref probably being my favorite. Just note that it's still got a 7 to 8x worth of supply to come onto the market. This is worrying, but if you look at the vesting schedule, it's going to happen over a few years. So this is a very much a long-term DCA. Although the total market cap, the fully diluted market cap, is only 21 million. Maybe it halves, maybe it goes lower, but that's pretty low for the biggest DEX in the near protocol eco. This is one that I'm looking at, and I'm kind of just giving you guys the logic here. And the logic is that if we invest in an L1 and the L1 does a 10x, then we're going to want a little bit of exposure to these ecosystem projects. So like I said with DOT and Moonbeam, Ref and NIA kind of go hand in hand, because if you can invest a small percentage into something like a Ref, then let's say you have 90% NIA and 10% Ref. Then if that 10% goes to zero, you don't lose much. You still have the majority of your NIA bag. But if Ref performs well, then that's potentially 100 to 1000x. That's life-changing gains, like potentially 100x. And that's not that out of the ordinary. Like 100x would be a 3.7 to a 370 mil market cap. A 300x would get it to $1 billion. Look, I know it's crazy numbers, and the likelihood suggests it never gets there. But I'm just giving you an example of the kind of logic that I use when I'm analyzing these projects and kind of like looking for upside, because crypto is all about asymmetrical risk. It's about putting the least amount of capital down possible whilst exposing yourself to the biggest amount of reward possible. And that's one of the reasons why, I do like having a little nibble at these projects, but I don't want to, be a broken record, but I am looking at accumulating them more heavily when further downside occurs. But I am nibbling at them. And then obviously gaming, but gaming is another one, and that's another beast. And there's also a few more narratives of like the security narrative, the L2 narrative, the bridge narrative. I think there's many narratives that haven't really come to the forefront yet, that are going to be massive in crypto. But let's take our time. Let's just come up with our plan. After today's show, if you take anything away from this show, get down a piece of paper, write down your DCA plan, write down the levels you want to DCA at. So you're taking the emotion out of the game, because when Bitcoin hits 15K, you don't want to be sitting there panicking going, oh, it's going to hit 8K, and then, freaking out, even though at these levels you probably would agree to DCAing at 15K. So get a piece of paper, write down your DCA plan, write down an amount. And if your income's a little bit uncertain, then write down a percentage amount of your income or a percentage amount of your portfolio, and start coming up with a watch list. And over the next few weeks, I'll be giving you guys a watch list that I'm looking at, and we can go from there, and we can start accumulating. But those are just a few of the things I'm looking at now. And I'm also doing a little bit of trading on the side, because trading is basically what's keeping my my stablecoin balance ticking over a little bit. I know Sheldon's been absent for a while. I just quickly wanted to touch on that. Sheldon will be back, like I think within the next couple of days, he told me. He just didn't, and I don't want to put words in his mouth, but based on what I can gather, I don't think he felt comfortable with just the the crazy volatility in this market. Like when you get a massive red candle downwards like that with no bumps or no wicks upwards, it makes it very difficult to trade. So I think he likes trading when there's a little more clarity, when there's a clear setup, and when we're not just in free fall. And I'm sure he'll be on to continue this live trading challenge with you guys. And I'm excited for the next time he goes live, because this trading portfolio I have, I think it's 5 to 10% of my total portfolio. Not crazy amounts, but just a percentage I do to trade, just to have a little bit of fun. Obviously DCAing, hodling, that's my thing. That's my major strategy for this next bull run. But getting involved with the trading is something I'm doing as well. So obviously, if you do want to get involved, he will be going live probably within the next few days, if not sooner. And if you do want to get involved, there's a link in the description to sign up for a ByBit account. Now, if you do sign up, there's a couple things we're offering at the moment. The $4,200 sign-up bonus, depending on how much you deposit. Ran also 10x's portfolios on the show. So if you sign up, you have a chance to get your portfolio 10x'd. And then on top of that, I heard a little rumor that there is a Banter NFT potentially coming soon, that will be given to the most loyal followers. The most loyal followers being the ones that support the channel by using the ref links. Because we don't shill projects down your throat. So obviously the way we monetize instead is through referral links. And you guys benefit from that as well because because you get the sign up bonuses, portfolio 10x, etc. So it's good for all of us. So if you want to sign up, get involved in that trading challenge, which is going to be cool. Hopefully we do make it to the million. I still think it's very possible to trade your way to 1 million. It's not my bread and butter, although I have, as you guys notice, have started to do a little more TA because it's something that interests me, and it helps getting a little bit of clarity. But the majority of my portfolio is angled towards my hodl bags. Show went a lot longer than I was expecting. I am sick. Hopefully I'm okay tomorrow. If things get worse, I may not stream. But we'll have to play that one by ear. Thank you guys for joining nonetheless. And I will either see you tomorrow or the day after for the next stream. Have a lovely day. Peace out.